Market observations for Armadale in WA. This is a southern district of Perth, just inland, low socio-economic. Does that mean that it's an area that should, be even worthy of our attention, or should we stay away like the plague? I have been seeing some interesting conversations about this area in recent times. Let's take a deep dive, guys. Let's analyse the local government area, see if it's worthy of our attention, then take a deeper dive into some individual suburbs and streets, seeing if we can pick out some gold, some gems through this lower socio area. Just because an area is lower socio doesn't mean we have to write it off. Remember, strong capital growth comes off a lower base. If an area has already, gentrified, or it's already, really high in value, less people can afford it. Sometimes these more affordable, lower price point areas have very strong growth. But they can also, from my own personal experience, be a noose around your neck. I have owned a lot of properties in regional areas. Some of them were too lower socio. There is definitely such a thing. Those properties really did cause me a huge amount of stress, and I don't own them anymore. Okay, they didn't grow in value. They were a nightmare to own. So we definitely have to be very sensitive to this, and I'll take you through that analysis now with Armadale in WA. So as always, guys, property investment is a science. I'm going to be starting off at the local government area level. This is a larger, longer term study. So around that 3 to 5 years, we have a separate set of data that we do look at when performing this type of analysis at the local government area level. Think of it in terms of the where. Is Armadale worthy of our attention for the mid to long term when we have the whole country to choose from? If it is, that's when we decide, is it the right time to be buying there? It is a separate, shorter term measure that we look at, 0 to 3 years. Different algorithm, different data. We have to have two models working together. So the market opportunity, is it worthy of our attention? I will be digesting this in a pie chart in a moment as well. The number one provider, or the number one industry here, is healthcare, social services. Then we have retail, but the third one is education and training. These are the types of employment I like to form the backbone of my markets, especially healthcare, social services. So a big tick there. Unemployment, it has been going up for the last decade. So we have to be very careful here. That's a big red flag. The unemployment rate is now up to almost 10%. Okay, this is 1 year old data. We need to see what's happening there right today. But the trend line is not good here, guys. We need to pick our spots. With these lower socio areas, there might be entire suburbs that have very high, extremely high unemployment rates, and other suburbs which have very low unemployment rates. So this is something we need to be really careful of. Let's keep that in mind. Population, it has plateaued here a little bit, guys. Okay, you can see here the growth rate. It's still extremely strong, but around that 3% per annum. At a national level, that is outstanding. Okay, nationally we're generally around that 2% population growth. Here we are almost double the Australian population growth. You've got to think about this logically. Why do people move towards an area? And it's not generally because they are, moving to a new area and they're forced to. They're generally moving towards the area because something's attracting them to that area. So this is what we have to sometimes think about with this area. It's low socio now, but something is happening there to attract almost 4% per annum, which is extremely high levels of population growth, especially in WA terms, every year coming to this location. What is drawing them there? It's not like these 4% of people are moving there because they don't have a job, they don't have anywhere else to go. It might be the case if it's very low socio, but for these types of population migration numbers or transition numbers into an area, there is something going on here. Let's try and work out what it is. Overall, let's have a look at the buoyancy of the market. Before I go into this type of analysis, let's have a look at this diversity, employment, lifestyle. Try and work out what is drawing people to the area. Okay, we have reasonable income growth. Commute time is very good for this type of, Perth, periphery outside satellite area of a large capital city. It's great. A lot of localized employment in the area. Lifestyle factors. Do we have our Bunnings? Okay. We have our general areas. Armadale is down here. It is inland. It is south of Perth proper. it is, a lot of the lower socio areas coming towards the Perth airport are, still higher price points, still closer to the Perth CBD than Armadale. So we see that the coastline is over here to the west, obviously, and we are over here in the inland areas. So we have our Perth airport within 30 Ks. We have the Perth CBD, we have unis within that 30 Ks. You are having to drive, you are having to catch a train. Okay, so it's not like everything is just around the corner. As far as Perth is concerned, it's not hugely accessible. It doesn't have those really strong lifestyle factors. It's probably not why people are moving there. Okay, that's probably not the reason. Let's have a look at the new projects coming through the pipeline. We have tremendous amount of money being spent on roads, upgrades, infrastructure, some prison expansions, courthouse expansions, secondary school upgrades. These are not the glory items, the new marinas or the new sports stadiums that you really do improve people's lifestyle. These are the tangibles that need to be right. This is the type of stuff that the state government says, we want people to be moving towards the area. We want to really get that backbone of the location sorted, the infrastructure, the arteries connecting people, those major public spend items that need to be done before we can then start really gentrifying this area. So this is a state government going, all right, what big ticket items do we need to get out of the way to set this area up to receive more people going forward? And we can remember almost 4% per annum population growth. There are a lot of people moving towards this area. So this is a state government getting their ducks in a row. Population growth, look, we know high population growth is expected to continue, over 3% per annum population growth for the next 3 years projected. That is a Ripehouse advisory metric. It's not been serviced by new housing. There are some suburbs which have very high new homes construction, which you'll see in a moment. But overall, as a local government area, we're not keeping pace. Okay, we're getting an undersupply and it is worsening. So let's have a look where that new construction is coming on board. Some of these areas closer to the water, the western areas of Armadale, over 20% new homes in the pipeline. So basically, it's the western part of the local government area which has a lot of the new supply. If we've got 3 or 4% per annum population growth coming in, and we've got 20% new homes in this suburb, then we obviously don't have a huge amount of price pressure of that demand being underserviced. The core, the established core of this local government area is already built. Okay, this is where the train line is. This is where the local services are. This is the heartland of this local government area, and it has no new homes in the construction pipeline. So because this is a satellite area, because you need to be on those key hubs, those key industrial hubs, those key commuter hubs, those arteries, and there's no new homes being constructed there, the core drivers of utility and demand are internally focused. All the new homes are being constructed around the periphery. Well, as more homes are constructed around the periphery, it's drawing more value to those closer to those key drivers of utility. The one exception here is the western pockets. We have to be careful of this. This is where these new homes are being constructed, and guess what they're closer to? They're closer to the water, closer to the ocean, closer to all those lovely natural positives, those lifestyle factors. So they have two drivers of utility. They have the core Armadale local government area and the CBD of that satellite area. And then they have, the Rockingham, the Oceanside, all of those wonderful lifestyle factors there. So you're caught in the middle. So I would love to see, potentially all of this supply on the other side of the LGA that would, I guess, improve the ripple effect towards the middle of this LGA. It's a negative that it is closer to the water, but for me, let's get in nice and close to this train line. Let's stick to these suburbs that have under 2% new supply in the pipeline, and that keeps us safe. That keeps us insulated. If we are close to these key drivers of utility, even though we've got all these new homes being constructed, we are controlling our supply and demand dynamic. So let's keep that in mind, guys. Feel free to go through in your own time these individual suburbs and really think about this critically. Overall, really high population growth. Overall, employment is a little bit iffy. We have to be very sensitive to the individual locations. We have to be very sensitive to supply coming into this market. But when the state government is investing so heavily in these big ticket infrastructure items, all these wonderful things are going on, it generally means they are wanting people to move towards the area. Generally, when people are moving towards the area, they are improving the area, not pulling it backwards. So you would expect with this type of population growth, it to gentrify going forward. Let's have a look at the actual supply, the market dynamics, the property market fundamentals. Days on market, extremely tight, okay? Very, very heated market. We have very high competition still in this market. It's been high for 12 months and it is still extremely high. That means, what is that? Nearly 31 in 3 properties are selling in the first week. Think about that. That's about as hot as it gets, as hot as I have seen across this whole country for as long as I've been tracking this data. Stock inventory, we did have a very down month here in August. It is around the normal levels for the 12 months. Okay, so no real trend lines there to be aware of, but days of supply has been decreasing strongly. For the last 12 months, we are in a very heated market here, guys. So really, all of a sudden, is the buying window still open? Is there too much heat for us here to operate effectively? For me, the demand is extremely strong. The days of supply is indicating that it's a very tightly held market that's turning over very effectively, and asking prices have been growing strongly for 12 months. Up over 10% capital growth for 12 months. Is there any steam left in this market? Let's have a look at the discounting amount. Okay, we want to have a look at the blue line, which is houses. This is showing an extreme amount of heat that's growing. The heat may have been dissipating out of this market for the last 3 months. This is something that we do have to be aware of. But for me, this is still in an upswing. For me, when I'm still seeing this type of positive vendor discounting, it's showing that there is still heat in this market and it's still expected to continue going. Let's have a look at sold prices. We are still not back up to this 2021 peak. 2022, we've had a bit of a correction coming into it, and then it's been pushing forward throughout 2022. For me, this is a really bullish sign. I would like to keep moving past this high peak here in 2021. For me, when I'm seeing the tightness of supply, the low days of supply data, we have seen this, the buy side, very bullish, a lot of demand in this area. So I'm comfortable with this, especially when the market's been here and it's now coming back up to it. This is a great entry at a great entry price point. Let's have a look at the rental side of the market. Remember, for this type of industrial, lower socio, it's a rent leads the buy. Okay, that's generally the order of how demand moves into a market. We have a tightening and very tight, extremely tight rental market that's only getting worse. We have vacancy rates down here under 2%. Okay, it's tightening, expected to continue tightening. All right, if you look at how long it's taking to rent a property, you're under that, you're around that 1%, 1.5%. It's tightening even further, but it's extremely tight in the rental market. That's leading the buy side. It's driving rents up through the roof, okay? 440, 450, up now to 460, 470. Expect that to continue. This type of affordable location, people are moving towards it. You can see the population pressure into this market. They generally rent first and expect rents increases to lead the buy side. All right, so let's have a look. Yields are holding up really nicely, up still over 5%. So I'm seeing a lot of strength in the rental side of this market, and I would expect this to continue to kick on for another upswing in values. Expect this to move another 10% or more in the next 12 months. Obviously, nothing is certain in this world, but the indications that I've seen from this data here today do demonstrate this has got another run left in it. Individual suburbs to target, we have to be very, very careful with low socio elements. Okay, let's just have a look at Seville Grove. It's jumping out to me there because it is demonstrating to us it's in the buying window, and it has 5.9% average yield across the suburb, right? So even when we pick our spots there, we might be able to find a street location that has even higher yield than that. So look here for the south West of Seville Grove, you've got a clustering there of 6% or more in yield, where the northern pockets are, lower fives in yield. So expect that, look towards the southwest of this suburb for higher yields, but that might be bringing with it lower socio elements. So that's generally where the public housing is located. Okay, so we need to be really careful of that. Let's have a look at occupancy types. Lots of owner-occupiers in this suburb. Over 2 in every 3 people are owner-occupiers, which is generally pretty good. That's a really strong, sort of nice demonstrated sign to me. We have to be careful in these suburbs for new houses being constructed. Okay, so if there's new homes being constructed in neighbouring suburbs, it does come in and impact this individual suburb. So let's take our time going through Google Maps, take our time talking to locals, really understanding the different larger blocks that could be rezoned, and are they closer to the key drivers of utility? Okay, the CBD areas of Armadale as an LGA, the train lines, the key commuter hubs, the hospitals, and all those types of things. Okay, so street level dynamic, we have to get this right. We want lots of owner occupiers, lots of houses, as you can see here, higher than average rents, higher than average yields, and lower than 10% public housing. 10 to 15% is my absolute maximum at a street level in this type of location. So let's try and make the most of these individual suburbs. Seville Grove is jumping out to me very quickly. Let's have a look at the suburb level vacancy rate, under 1%. So we're on the right side of the local government area. Remember, the local government area overall was around that 1.5%. This is tighter than average. Days of supply, 63. So once again, this is about average for the suburb. All right, so we can see here 63. A lot of the neighbouring suburbs are up over 100. So this is really leading the charge in terms of, demand and supply. The demand is really outstripping the supply in this market. It's very effective at turning over. Vendor discounting, 1.7%, so that's about normal. Let's have a look at the yield, 6.2%, so higher yielding than the remainder of the suburb. Remember, for these working class areas, rents and higher yields lead price growth. So when we are in these higher yielding areas, we have to be careful of low socio elements. Generally, property prices catch up to increases in rent. All right, so we like to see the higher yielding pockets in these locations. Owner-occupier levels, we actually have almost 3 in every 4 people as an owner-occupier. That's very high. I'm very comfortable with that. We do need to be careful of this suburb down here to the south, though. Which one's this one? It's just loading up. The Armadale proper, the Armadale suburb, has far too few owner-occupiers. So we know how to make the most of this, guys. There's a few suburbs worthy of our attention. This is the type of location you really do need to be careful of. Talk to a lot of the locals. Talk to a lot of the experts on the ground, the property people. We need to get this street level right. Okay, we don't want to be buying in an area the locals are staying away from, because as this area gentrifies and improves, 4% of people moving there every year, 3.5% of people moving there every year, it's definitely on the improve, lots of new homes being constructed. We don't want to be on the wrong side of this. We want to be on the better side of it. Okay. Please like and subscribe this content. It means a lot to us. We put a lot of work into preparing this information for you. If you like what you see, like the video and subscribe to the channel. Hit the bell icon so you are the first to be notified. If you can jump into the comments, any other areas you'd like us to focus on, any local observations. Have you bought a property here recently? Have you stayed away? Would love to get into your mind, and any questions, we'll be here to help. Thank you.